Hello, world. Nice to see you, Carissa. Nice to see you, Joe, and everybody else, Vic, Merrick, all y'all out there. Welcome to the show. I'm Rocky Outcrop. This is the Rocky Outcrop Show. How are you feeling today, trade spotting?
Fantastic!
It does seem that Jimmy is feeling a bit better today, so that's good
How are
news.
you feeling today, Rocky?
Jimmy's asking me how I'm feeling. I'm feeling all right today.
Sweet. See you on the line.
See you online. So we're back again as we are every morning to talk about the financial markets. You can see the thumbnail a bit different today. Got the NYSE up there. Want to embrace that. Welcome in everybody that wants to talk about improving their own financial literacy, and we'll do that. We've also got news articles to discuss, keeping it nice and light on the news today. Mostly just got two things to discuss really at the minute, unless anybody wants to suggest anything. Happy Tuesday to JT858. Good to see you, Justin. So we are here to enjoy the morning. Now I have delayed my stream slightly today. I have had a bit of a migraine earlier on. Migraines, eh? Who needs them? And then after that, I went and meditated in the Discord with Eddie and Apple, and it was a very positive and uplifting experience and well worth the time. Shout outs to those lovely people, and as well to everybody that wants to ever join us in the morning for doing that sort of a thing in the Discord, or the afternoon if you're in the UK. Good, perfect time of the day to be doing it. Morning, afternoon, evening, night, whatever, wherever you are. Well, the news articles that we've got to discuss will be coming up in just a second as we hit the top of the hour. So, like I say, I'm Rocky Outcrop. This is the Rocky Outcrop Show. Thank you so much for joining me. Do hit that like button. And this is a chart up behind me. And this chart thing, will be something that we'll be using throughout the show quite a bit. The technical analysis is the lifeblood of any successful trader, in my opinion. And you can see this is a bit of an unusual looking chart. What is that? That's confusing and unusual. Well, we'll be talking about all of that and more in today's show as we get to look back a little bit in time at technical analysis. A new feature that I think that we can do from time to time on the show is to go back in time and look at historical charts using indicators that we are familiar with from the modern era. So we can go back to before people commonly used Fibonacci retracements, or even before anybody had heard about Dow theory, and take a look at some charts. We can go back before Elliott Wave, of course, go back before the RSI, go back before the MACD, Bollinger Bands, all that sort of thing, and just see how they work, how it gets on with the charts. Of course, as well, it's worth knowing that people didn't really use charts back in the day as they do nowadays, obviously. Computers make this seem so very easy, but even just the simple act of doing something like this, where you zoom in and you've got different size candles on your piece of paper, would have involved redrawing the whole thing by hand back in the day. Of course, you can always manually zoom using the old leaning forwards, leaning backwards thing, or a magnifying glass. But you get the point, right? And then having to update these charts daily. And they didn't even do that because they were more focused on things like just writing out the price numbers and kind of knowing the key levels in their head. And it's much the same way that almost like Stephen Hawking ended up having to do maths after he was unable to use his to write, etc. So so what's the news, Rocky? Well, the news today is two things. One, the IMF chief, that's the International Monetary Fund, has spoken about the new $650 billion special drawing rights allocation. That's SDRs. You might have heard of these SDR things before. Now, you might not have. Explained here in brief by the Financial Times as being things that help countries with weak reserves reduce their reliance on more expensive domestic or external debt and for states hard pressed to increase social spending, invest in recovery, and deal with climate threats. They offer a personal additional resource. And with the current state of the world, this could be a massive deal for a lot of countries as they look to reach 40% vaccination by the end of 2021. And that is a target for every country in the world. So it's a big, 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 big target. And it's good to see that there is this allocation of special drawing rights. Now, there's a lot of different ways these things work. You can check out the videos on YouTube and learn all about it there. I do believe that TradeSpotting himself has talked about this in the past, and TradeSpotting is the type of guy that I would go to and say, hey, can you remind me about this? What was exactly was one of the things about this? And it's interesting components that you can use these things for in terms of your macroeconomic picture, for example, with regards to how the you can use it as a way of hedging against inflation in your own currency, as well as you go through these more expensive external debt mechanisms. And it's a good thing for the world economy, and it's a reminder as well in the sense that we're in such an amazing, remarkably advanced world. You know, as I sit here and amazed at the ability for me to do a whole bunch of things. I mean, for instance, I can magically get rid of my background here. Look, that's just pure magic. I did that with magic. It's a wee bit kind of scruffy looking on the white background, but you get, you know, magic. And then as well, sheer wonder and awe at TradingView every time I use the thing, because it's just amazing. So that's cool, and that's just good to see that the world economy has got levers in place for some of the poorer economies in the world to be able to try and deliver something for their people. Now, of course, as well, there could be a whole bunch of debate about the economics of the vaccine itself and so on and so forth. But without getting into the nitty gritty of it, it's good to see that there's this thing, that there's this mechanism out there that is being made available, and it's also engaging with its members on new resilience and sustainability trust that could see SDRs help poor and vulnerable countries with structural transformation, including climate-related challenges. So it's not simply just about this vaccine. As was mentioned earlier on, we also know that we're really, in a world where we need to remember about climate change being such a big deal. And of course, it's these developed and developing economies that are causing such a lot of damage in the world, but a lot of the poorest economies in the world are at the bleeding edge of experiencing the harder outcomes from it, such as water shortages, etc. As we in the wealthier and wetter West don't often notice. So these sorts of things are good measures, and it's also good to see then in terms of the news that the Jackson Hole Conference hopes to address an uneven economy. So we can come back and discuss that, I suppose, maybe at the top of the hour when we come back around at 3. But there's this other piece of news I thought I'd spend a couple of minutes looking at with y'all, because why not? It's a little bit different. It's not the sort of news that you'd get every day. And there's a picture which was hanging in... where was it hanging actually before? Anyway, there's a picture by Turner of Malmesbury Abbey in Wiltshire, and it's going on public display for the first time in nearly 200 years. I wonder if you can see this on your screens. No, you can't at the minute. There's the picture. It's going on this public display for the first time in 200 years. Now, it's a good painting and all that sort of stuff. There you go. It's got some cows in the picture, and it's got just behind me, it's got a man and a lady there, and there's the old Malmesbury Abbey up there in the background. And yeah, it won't be your favourite Turner painting because it's also very, very much a kind of more or less unknown one. Anyway, it's good. It's good. There's other things happening in terms of the arts in the UK. There's a 160 million year old crocodile going on display, a rare Bronze Age sword, and the original Jolly Fisherman painting. We can also go and Google, so you can see the Jolly Fisherman painting. So where is the Jolly Fisherman painting? Well, I don't know which one it is. Anyway, there's some paintings of fishermen. Right, great, cool. Well, that'll do for the news section. And in the next couple of minutes, up until 10 after the hour, your YouTube links from Twitter doesn't work when clicking. Yeah, that sucks. All right, I'll have to go and give that a wee fix, Rooney. For the next couple of minutes, I can do stuff like check in with the chat on how yous are getting on. How's gold getting on currently? It's at $1,808. We can have other stocks up in the background. There's our good friend GME, which we love so very much. The company which may, in fact, radically change the operations of nefarious actors in the American markets, which is cool. So we're going to be looking at that as well today, of course. Sicky H-Strom. Oi, Rocky, your YouTube links from Twitter don't working when clicking. It don't be working when the clickings. So if anybody else could share that with on Twitter, then I'll retweet it. At least there's that. So if you share the actual working link, then I'll retweet it. How about that? Mention me in there. Mention me. Yeah. So if you mention me, then I'll go retweet that in the next 5 minutes. That'd be handy if you would do that for me. Derbaum, how are you doing? The tree. Oh, XRP would be very nice right now. Okay, cool. Wonder what it's doing. The last time I looked at it, I said it was going to be dropping down to a wee bit because it was at like 150 or 130, I can't remember. So yeah, I was trading it myself at the time. You think I would know better. Hey, Bad Mama Jamma. Well, I know my two other fave stocks looking good, AHT and MMAT. Yes, right, Met Materials there. Good to see you, Harriet. Excellent. Thanks for emailing me last night. I'll get round to chatting about that at some point. Why the ground sings in rain? There he is, a man himself, Eddie. I am dedicating the rest of my existence to fighting climate change. This is my post-MOAS pledge. Cool, that's cool. Well, something needs to be done about it. Definitely. Something needs to be done about it. See, climate protesters, that was some news I actually wanted to bring up. So I was going to get that news and show it to people, but I didn't see it when I went looking for it straight away. So let's just see climate protesters in London. Just some news that we had here yesterday. There was Extinction Rebellion. There was locking themselves into vehicles, etc. And I know that there's other things happening around the world at the minute with these guys. I'm not sure if they're being reported well or not, though. So, like, that's something which is going on right now. I know it is, but it's not getting a massive amount of news coverage. Here's the Independent newspaper in the UK talking about it. Extinction Rebellion London protest live. Police try to clear roads as activists scrub clean the door of HMRC. You see, it's funny because you go over to like bbc.co.uk, of course, you know, and where is it, guys? Why is he not talking about this going on in the middle of London right now? Oh, I know why, because I'm on the overall page. How about I go to news? Let's see, is it on the news part of the thing? And you're like, okay, Afghanistan, Taliban, COVID rules in high schools, blood pressure. Okay, so there's something about an Iran prison chief. Right, okay. Oh, I know. It's because it's in England. I'll have to go look in England's news for it. Rewards offered for manhunt. 2-year-old died. In fact, 3 men dead. Man bailed. Shot in the head. Help needed to identify. Toxic fumes. Oh my god. Oh my god, there's the one piece of decent news, the Turner Heart on display for the first time. See what I mean? So it's not really getting reported, even though it's happening right now. It's interesting stuff. Yeah, climate change, big deal. People obviously care about it. Here we are at 12 minutes or so after the hour. Good to see y'all out there. Rocky Outcrop, have you read the news I posted in Discord regarding climate and economics? Not 100% sure if I did catch that one, but hey, let me just bring up the news page. In fact, I did notice that there's a whole bunch of stuff in here, and I do apologise on this day of much newsness to have not spoken about it. The Asian versus global market, that's one piece of news. This has not happened for a very long time. Huge divergence. Well, you know, here's the sorts of things that I was going to be talking about in a sense in terms of in terms of the global economies, etc. You're seeing this comparison jobby on the go. What's that? That looks like SPY in the background. Asian versus that's global market, the global market. Asia Pacific Index, MSCI World Index. Aye, well, sure. The world index is obviously dominated by the American markets. A couple of other decent national economies at the minute. Kind of thing that I was thinking about talking about in terms of, for instance, I had the gold chart up there. No, did I? Yeah, I did. And I have the SPY compared in the background. Do I? Is that what that is? Why is it not lining up? Oh, hit the compare button again. It'll work. Compare. So this is gold versus SPY. Dum 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 dum. And it's interesting to make comparisons as to when the divergences really occurred. So this, with it being on a percentage scale chart, means that you're looking at the increases, decreases in certain things at certain times. And you can look back to sort of 2007. You can see that we came in for these highs in 2007, and while there was a decline into 2008, that we see a movement down the way in terms of over the course of that year of sort of 16%, 18, 20% to get to the lows, and then kind of back up to -8%, in terms of where these peaks were coming in at. So it was easy enough in a sense to think, yes, okay, there's been a pullback. It was a 20% pullback. We've now come up, another chunk again. Of course, that rise up the way at that point was 11%, so the economy dropped 20, went up 11, all in 2008, kind of thinking, hey, what's going on over here? Meanwhile, of course, the in this chunk, in the run up to those highs where we got that 11% drop back, then we saw the gold prices were running up that entire time. And this is the kind of the conversation point of when is gold a hedge, and when is gold a still a potential, and when does cash become king, essentially? Because that's the thing. That's the thing. If you want to talk about the big financial crash that happened, really what people refer to when they're talking about it kind of emotionally and logistically is this period in May until the sort of the second quarter of 2009, where the markets were cascading down the way and things were looking like they couldn't be recovered until such times as that. Things were okay, obviously not brilliant. But that's maybe a bit of an exaggeration, but you can see that there was still an appetite for risk in a sense at these points, up to this point, then more so for gold during the decline in the SPY. And then, of course, when there was this decline in the SPY, there was a decline in gold as well, a significant one. But you can look from the highs, just so that people get a wee bit of an example of like this type of chat, instead of just hearing it out there when people say, this is how things go in the world, and you're like, that's how it goes, and you just hear it from somebody else and pass it on to somebody else yourself. We can look at this together and actually understand the information at the same time. So how about we do that? So you can see that gold prices declined by 30% from that peak period, and that the economy if you like, go from the peak, which actually came after the peak in gold, curiously, you'll see that the from that peak down the way to where we declined, that it went down 51%. The SPY during that same period went down 51%, while gold went down 30%. So if you'd taken $1 million and put it into gold at this point here, you'd have been left with 700K. If you put it into the SPY at that point there, you'd been left with 500K. And this is the idea, when this is going on, then you know that, of course, that's when that phrase comes back to being real, where cash is king, right? That's when cash is king. That's when cash is king. So if you're looking at an economy and you're asking questions about what's going on, then now you can understand, at least in brief, and explain and articulate to somebody else how there's different phases in the market, and that while, of course, investing in gold might be a good idea if you're already invested in stuff and you don't plan on and you want to remain invested and you've got an appetite for risk, if you like, at that point, then of course you can experience these two declines at the same time. Now there's also the macro consideration beforehand of the run-up phase, where you had the prices moving up while the economy itself had actually begun to decline. So then you're talking about to different types of investors as well with regards to these two different scenarios. And let's be honest, the conversations that you're having about it are all this one. Right, let's be honest about it, right? If you watch YouTube, etc., they're all this one. They're all, hey, the economy's screwed. This is why this stuff is good. Sorry, that's the wrong way around on those. The economy's screwed. That's why this stuff is so good. That's what people say. Maybe this is a wee bit too close to me. I should have considered this before starting. Damn it. I bet you it has been the entire time. Anyway, let's just check and see how bad I'm over on the side. How bad was this before? Well, I guess it's probably okay. So this period here of economic decline saw that there was an appetite for wasn't an appetite for precious metals at the same time as there wasn't one for gold, right? So we can look back and we can see other examples in time of this sort of thing happening. This is the weekly time frame. See, the problem with looking back at these really historical AF charts is I'm not sure how low you can go in terms of time frames. There's been other economic declines recently, but how about we look at them in terms of things like the post. If we're looking at it, see, we only get the 24-hour time frame working back as after post 2008 financial crisis, so harder to make that comparison, but we could look back at the other great big economic declines in the past. When the gold prices were $35 until 1960, though, it does make that a bit crap. What do you mean the gold prices were $35 until 1960, Rocky? Well, just as it happens here, you can see that we're on this chart. We're at 20 after the hour. It's 2:20 here in the UK. It is 20 past 10 in the United States. We'll be moving over and taking a quick look at a few of our favorite stocks before the NYSE and markets in the United States open up for trading. Why? Come on, let me change this. Right, zoom in a bit. No, zoom in a bit. No, not going to let me zoom in. Okay, and so yeah. So you can see here, this is all the way up until April 72. Had a nice big increase in the prices, really. For going back a couple of years, we saw it going up a chunk. Nice big chunk there, 30%, etc. From, get rid of that comparison thing. It's really, sorry. Where is this bloody comparison thing? Remove. Nice. Okay, back on a normal chart again. Woo! Look at gold. Oh, look at gold right up until this point here. This is this sort of gold standard idea. Whatever. We saw the prices rise up in gold, $40, $50, etc. Getting into the 70s, things start to get a bit crazy. We're already up at $60. Then it went to $120, up by 74. It was up to $180. And you can imagine in this period of time then how crazy people would have been thinking that the inflation was in the economy, essentially. So you're having a conversation with somebody who really loves gold. They love gold, and they love being paid in the United States dollars at their job as a clerk at Gold Brothers Company. And they take their wages and they buy their gold with it over here. And they're like, this is great because I get paid $35 a day. And I get to buy one gold every day, and it's wonderful. And then, of course, a year goes by, and they're there, and they're not able to get one gold a day anymore. They're thinking, gosh, inflation, hey? Oh, it's been worse. It's worse than 10%. It's worse than 10% at the minute. It's already the prices, are up at $40. Sure hope the prices drop back down and don't go worse than they were back in that big rise that we had in 69. Anyway, then of course the prices did go on up at 72 and onwards, and you can see then by the time it got into the next year, he's now actually only getting like half. He's getting half a gold. He goes in to buy a gold, and it used to be 35 for a gold, and now it's 60, now it's 70 or whatever, $70 for a gold, $68 for a gold. So he's getting half a gold, and then he goes in over here, and it's $120 or something like that. Now he's getting 1/4 of a gold every time, and he's like, man, inflation around these parts is awful. And then, of course, in this part here, it's risen up to 180. He's getting what? I hate doing the maths, right? But you get the point. It's getting worse. Inflation be bad around these parts. So, and this obviously just continues because that's the weekly time frame. And you can see the prices, obviously, of this stuff have gone up a lot. And that's a big component when people talk about gold and the price of it, and when they talk about it as a inflationary hedge. So a couple of little things, I suppose, in that sense to point out in terms of regards to the inflationary hedge, etc., come into play when you think about, in terms of the all-time highs with gold. It's actually lower than the price of gold was back in 2011. So there's like this de-inflationary type aspect from a precious metals point of view. Talk about it as an inflationary hedge, and they talk about it as an inflationary hedge, and they use they talk about how the value of your dollar is decreased by however much since however long, and they use certain mechanisms to do that. And you couldn't buy PlayStation 5s back in 1927. So like there's only certain things you can compare it to, and this is a part of that overall package. So anyway, we can now, I was thinking, so there's like interesting stuff, is this going to ultimately turn out to be a cup with handle? If it did, you'd be looking at a big decline. So maybe that happens with an economic sort of contraction, and maybe we do see the prices of gold actually ultimately decline even as low as 1440, and then rise up and do a range of sort of 1,000 to 2,000. So go from that all the way up to 2,000, from 2,000 to 3,000, and then be in a sort of new world again then at that point, because that's how the mentality of the people thinking about things would be like, well, we thought it was bad in this period of time when we had our biggest ever economic events ever, and now the prices of it are gone up to, well, maybe not as high as that, but the point being that the prices would have gone up, and that everything is now, of course, 1/3 as expensive again as what it was before, and that'll satisfy all of the sort of the inflationary bugs out there that want to talk about that sort of stuff. 25 to the hour. How about we take a quick stroll through some of our favorite stocks pre-market prices here, zooming on in, she said, all the way in, and what we have here is the pre-market prices on Jimmy being in at around about $167.20. Interesting stuff. Good to see it. Nice, strong performance. Asked in yesterday's chat what the overall sentiment for the day was, and we were thinking 175. Not for the day, for the week. The vote came in looking for 175 plus was what people were feeling in terms of optimism. Looking pretty good at the minute. Again, certainly at this stage, you'd have to say that alternative theory 5-wave downward correction cycle rebound off of 162 for a movement down to 135 conjecture has failed, purely based on this period of time when we spent time up above that zone. Of course, they'd have been hopeful that would have been the case in around about 150. We didn't break 150. We were concerned about the horizontals primarily in these zones, and so far then, if we remain concerned on that front, we have done enough to have got a closure up above our previous high, and it's without divergence. It's actually as well just above the neutral line for the first time, breaking outside of that kind of wedge type thing that we were talking about over there, with regards to the contraction on the positive and negative sort of directional movement. And as well here, looking at the MACD, well, we've not got a local high as yet necessarily confirmed, but it would be divergent, would be bearishly divergent. But this is early days anyway in terms of an overall trend changing turnaround stuff. So we'll see how that goes. It's a bit early to kind of assess the strength of the trend when the trend's only just beginning over there. But sure, right, sure. Other things as well I thought we should maybe kind of think about at some points would be as well just this thing. This is the put call doodah. And if you think about it in a sense of whether or not this thing is a schizophrenic indicator of sorts. You could use it combined with other things together. It's something I'm going to talk about at some point. Don't know if I'll talk about it this week or not. But it's just it's something that I'll maybe start kind of introducing in terms of ideas about to people in terms of, just whether or not the put call ratio is above or below our, if you like, our sort of average there, and if as well if we're where the relationship is with the price action at the time, and then kind of if you want to think about it from the point of view of people are always wrong, the markets are always wrong, so like as stats will tell you, or so you go against them, or if you think about it more maybe perhaps accurately in the sense that that would maybe give you an insight into hedging of positions, of course, and profit taken, etc. But we can talk about it from a sort of meme aspect just to get the understanding thing done. First off, AMC over here, pre-market at 37.35. Nice again, showing us that there's this enthusiasm so far. Yesterday's candles, of course, just like GME were before, finishing the day a little bit red, but looking pretty good for us. Now, we know how this thing goes, opening ranges. We'll be asking, have we got a breakaway gap? Have we got the chances of coming back and filling it in, etc.? But it's good to know where we stand right now with mere seconds to go before the markets actually open, that we're doing all right in that sense, I guess. Here we are, 14.11 on AHT. Again, the same sort of little bit of pullback in the market yesterday, preparing for this movement up at pre-market and cashing in on that little bit of a move at the expense of others, or are we going to go back down and engulf? I wonder. We'll have to see, because things look pretty good at the minute, so tight and so close, but just in here pushing up and trying to change conditions with this most recent price action on AHT. MMAT over there as well, pre-market is 335, 1 cent away from the closing price yesterday. This one's starting off with bearing in mind, of course, that we're looking at this period where we've had extremely low volatility in this period of time, as you can see with the ADX being so low and the size of these candles. There was this kind of outlier candle here, but in and of itself the prices were moving down on that period of time throughout this. It wasn't putting it wasn't it was after whatever down here moving down. All of this stuff has been extremely kind of tight really in terms of the prices. Let me just bring up another chart so you can see for comparison points as the markets are opening this very second. There's AMC, a lot more volatility on there, but even despite that, no trending price action. There's no strength of trend, but at least we're getting a bit of movement there. Currently opening up at 37.35 on AMC, like we thought, of course, as we saw with the pre-market prices. Dropping down at this point here to take a look in the 15-minute time frame, hitting that auto button to make those candles just a little bit more visible, as they say in Le France. And yeah, okay, so here we have it. Like, no gap there on that 15-minute time frame. Let's just check here, 5-minute time frame. Little bitty, incy, wincy, tiny, weeny, yellow polka dot gap. So just jumping on over then to take a look at our pals with the General Motors Electric. No, wait. GameStop Corporation. We filled in that Gapperoonie straight away. Well, okay, so business as usual, open for business. Here we go. We're pod racing. Can we get this thing to sustain itself above this little bit of a wickety wick? It's interesting to see that the prices came up here and danced there twice with the and flirted with the prospect of actually moving up a little bit higher, and then dumped on down the way, rejected off the bullish control zone at that particular period in time. Notably, the DMI came up to hit off the 40 line, as it so often does, and while we're doing this here, you can see that there was a big, and this point in time, a big leaning towards the put side. So interesting just to see in that point of time that that's how that went. And they were right there. They were right. And the market obviously then dropped on down the way. So here we have it this time around. We're kind of in the same sort of area if you're talking about this as a support and resistance aspect of things. Just drawing this along here roughly. Oh, I moved that a bit much. Drawing it along roughly. Come on, my mouse drawing skills not so brilliant. But there's your support and resistance line done like they did back before they invented rulers. Now, okay, cool. So as it stands with regards to this put call thing, we've been operating in a upward trend here on the 5-minute time frame since the 19th of August. And when we put in a high, we've actually been moving then up to the point where we've come in for the average on this. And right in at that point there is when we've then moved up more. Interesting stuff. Then we've come in to the average point, and we are right at that point just now. And I don't know, we're seeing a little bit in terms of pivots in the markets coming in at where these not necessarily, just seeing the interaction here, where we're kind of achieving equilibrium on that one. So it's an interesting kind of thing to be aware of. Right. Anyway, so that's where we have it on that. Checking in then to see how we're getting on so far over here. 37.23, 37.27, doing very good here in AMC. We want to see the prices obviously being able to sustain themselves up above 38, but yesterday's price action really did give us a treat with us coming up so high, something that we were been asking for quite a bit with regards to AMC. Come on now as well, push on up and continue things on the go. 5-minute time frame isn't going to give you a massive amount of elucidation with regards to the longer term, or even just looking, for the day. I've not got anything up on the charts in the background as it happens, coming up to 35 minutes after the hour, so the first 5-minute candle closing up here in a minute or two. I'm just using the price action itself here. Really, I've got the volume, I've got the RSI, I've got this thing here, this multifangled thing. That's the DMI. This is the MACD. I'm just using the histogram of it, and that's a put call ratio chart for me there at the low end. So it's magic, wouldn't believe it's not so. That's the first 5 minutes coming in to close here. 7, 6, 5, 4, 3, 2, and 1. And I hope you are all having a good time out there in the chat. I'm going to check in with you. I think I should probably drop a poll in and see. So let's just go over to GME and see how it's doing in this particular moment in time. 167.70. Excellent stuff. That's what we're looking to see. So now we have to remain cautious, and of course, in terms of this, in terms of where we are now. If we do get a turnaround from this point just here, it's maybe worth pointing out the 1, 2, and then 3 instances where we would have bearish divergence on the go. That's not just on the RSI, that is on the DMI just there as well. And on the MACD, you can see that I've not got the accumulation distribution indicator on here as well at the minute today. It would be interesting to have that on, but it's like only so much space and only so much capacity in the audience's brain. So what we're looking for here with regards to this, I think, is easiest described right here here and now on the RSI in terms of just looking at this using a couple of trend lines, right? We want to see for instance, and starting off by making it kind of easy for us and to understand what we're discussing here, we want to see us not taking out the lower lines of this trend line here. We don't want to be taking out that lower line in any significant way. Now, you could argue that that was the line there and that we dipped below it and we were taking it out. Well, that's fine if you want to. Essentially, we didn't actually, confirm break it. Now, over here, you could be then making the same sort of suggestions and saying that we have already broken this towards the top side, right? We've already broken this towards the top side. So this is like a wedge. And what do we do when we look at wedges? Well, we look, of course, to the market, to the structure, and we say that what we want to be seeing is the RSI taking out this level just here, going up above 70 really, and sustaining it itself up there would be good. Sustaining itself up there, what do you mean by that? Well, even just going up and then coming back down again. And essentially doing even something like this, where you come to the RSI and then going up again there after would be very, 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 very good. This is still a 5-minute time frame, so we will be able to get to see if anything like that plays out. Essentially, the main component for me of it is not to see this big wave that I've drawn in happen, but is to see this how it conducts itself next to that arrow that there. You can see that as I've been talking, even that the prices have moved in such a way as to up there that I'm trying to reach for it. Up there, do you see it? Is that there? Do you see it? Right, the prices are flicking up above and below this line. So obviously this is like the splitting hairs aspect to what we're talking about here, but we're taking the time to do this. It's only the 5-minute time frame, so it's just 5 minutes out of our charting day, just to kind of make this little point that this is, of course, what we want to be seeing. It's all happening up here at 170. Wonderful stuff, wonderful, fantastic stuff now, and it is to be made aware that this is burning off the divergence on the RSI, which means that we can, of course, get a closure up here so that this is locked in, and then we're able to see the prices dropping back down. Then we're able to, in a bullish way, if the prices drop down now to 167 and then close and then drop from there, that would be a bearish way for the prices to close in terms of this time frame and what we're looking at right now. So normally during the day I talk about the opening range and we look across a couple of different charts. This is obviously is a little bit more detailed. It's worth doing. It's a lot more fun to be doing it while the candles are green. It's extremely educational. It's happening live in front of your faces. You can now see, of course, that the MACD is no longer got divergence. You can now see that the DMI has no longer got divergence, and you can see that the RSI, as we come in 30 seconds for the close. But anything can happen in markets, right? Anything can happen in markets, and all of these things could change. But there we have what we're seeing. Now, of course, the prices could continue to run from this point on up. I'm not being predictive about the prices. Essentially, what I'm doing at this moment in time is making a pretty good establishment of the risk if there is any sort of downward movement in terms of how this would impact on the trend, which is this upward trend. So what is our job as traders is, of course, the buying and selling of risk within any given trend, whether that's up, down, or sideways. And we have just closed that candle out. So even if we do now see a pullback, and this candle so far is red, but far be it for me to say it's going to be, could easily go on to be a wonderfully large green candle, and that's what I would like to prefer to see. In my sort of internal confirmation bias would be like saying, yo, green, 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 green. But, here we are looking at it and being analytical and, doing our jobs, I suppose, as opposed to sort of being the guy in the bookies betting on the horses. So this is where we are, and we're looking at it, we're saying that that's a pretty good innings from our team. Well done, team. Good stuff. Good going. And we also are aware that if we did see a pullback with regards to some having achieved an equilibrium of sorts in terms of the whether that's of course people's positions or their current hedging format and whatever the current equilibrium in terms of buy and demand, supply versus demand, supply and demand economics of this put call thing here, that we're at that equilibrium point. Of course, that's where it would be ideal to see things just from a sort of the respirations of the market find its turning around point. So that brings us up to 20 to 3 UK time, 22:11 in the east coast of the United States. Hope you're having a wonderful morning over there. If it's tea time with Rocky or if it's coffee, don't worry. Either way, it's fine by me. I hope you're having a good morning. Myself, my own cup is empty. I might take at some point a minute or two to go make a cup of tea. I'm glad I took an hour less to do the show today. I'm sorry about that for folks yesterday. For folks today who missed out on that extra hour. It does leave me feeling like we've cut ourselves a bit short. I've not done any crypto technical analysis or anything else. And I see Simone Cooper in the chat saying that BB is moving, and it was moving yesterday. If I'm not mistaken, it got a 5% or a 4.8% increase on the day yesterday. Let me just kind of measure this thing out and see what it was roughly. Yeah, no, wait, that's the 5-minute time frame. What am I doing? Right, so what was it again? This is the 4-hour candles, and we had this big old move yesterday from down here roughly in terms of how much the prices themselves traveled as opposed to open and closes, right up to where we are now. It's moved 7%. The range yesterday was a full 5.8% range there on that candles. Very, 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 very good movements, but in and of itself insufficient, as you can see there. But we're just now currently doing what is, of course, that next stage, by putting in what is conceivably a higher high, no less. In fact, this being your low, this being your high, this being your higher low, as remarkable as it seems. There's an equal low. It's an equal low. I mean, we're obviously splitting hairs here at this point. It's not a real obvious one, and I don't really like going into splitting hair territory. But yeah, there you have it. It's ever slightly higher low. And then concurrent, now we're looking at this and asking the question about, will we be actually closing this above this zone? It does look good. It is bullish. It has been bullish so far. Things to be aware of, I suppose. We've already finished off that volatility thing in the background there. So that's this thing here has this zone, the predictive move that I tell people about with regards to this thing that I've invented or discovered, whatever way you want to call it there, with regards to my interpretation of the DMI indicator as invented by J. Wells Wilder Jr. back in the 60s and 70s when computers were just being born. I have got this thing and it's been fulfilled. It happened with that movement back down, and that's one of the reasons why it was so very difficult for me to be able to tell if that was a higher or low, just how gosh damn accurate that indicator is. I was talking last night with Christy Callahan about that, and it just really is sometimes, I feel like if I spend too much time talking about it, that'll end up going in a sort of hype ego cycle, where I talk about this thing as being the only instance of it being just so gosh darn good ever in existence, ever in the world, ever. As I check that my stream is still working, it seems to be working. Thank goodness. Excellent stuff. We are 47 minutes into this stream. Brian Millen dropping $20. Thanks so much for that. Really appreciated. Goes very nicely with the other $5 that somebody has donated so far. $25, not bad. Thanks so much, and total to everybody that supports me at any given time, and of course to everybody that's a member of Patreon and the Discord and everything else. It's always fantastic. Massive appreciation. Brian asking me here, could you take a look at Netflix when you have a chance? Well, Brian, let's make it so. 45 minutes after the hour, we can see that blueberry, think darker, blackberries They are trying to push up above market support area here, resistance area, sorry, for us to put in what is conceivably being the bottoming situation for us. If I flip this over, it doesn't look like classic Wyckoff distribution in terms of the nice, lovely, jubbly shape of the thing, but you can kind of sense that there was this attempt to push higher that didn't really work out, and then the doubly top and the Adam and Eve type structure that's there. If I flip the charts over, so maybe we get something similar like that overall. You're a legend, Rocky. Thanks for everything. Janine, you're a legend. You're the legend, Janine. You're the legend. What was that we were talking about here though? Netflix. Yes, Netflix. What's their ticker again? Netflix. That's traded on the NASDAQ over here. Means my data is coming in from the CBOE. So in terms of like these smaller term candles, we could be seeing slightly different data from what was on the NASDAQ, but I think it's almost I don't know, in terms if I were on the 5-minute candles, it might be slightly different, or the 1-minute candle, although it looks like this is still actually fairly liquid here, but it's seeing these gaps are coming up because I haven't subscribed to that NASDAQ data. Maybe I'll do that and add that to my thingy, not while I'm on stream, but it's cool to be looking over here at a technology stock. Hey, right. And what do we have here? Let's just fact check ourselves with regards to, did we get this move worked out? And it did in the end, so that's another example of it. Did we get this one? Is that where did that candle open up at? This is a good one, especially since this is CBOE, and like I said, the liquidity of this thing could be slightly different. It's this candle just here, and it didn't come all the way back down to that point immediately. Interesting stuff. It didn't get all the way back down to the open. So I'm still trying to discover whether or not I'd be thinking about this as being measured from the open or the close. Now, I like to think about it from the open, but this could be a question of whether or not we're looking at the right market. If you're looking at it from the close, then of course we did come back down and fulfill that move. If you're looking at it from the open, then it was over here and it was to the penny. So it's generally speaking to the penny, the way that this thing works. Low disk space. Okay, computer, just don't crash on me. Don't, get so low on disk space that you end up taking your own life. I know you're feeling low, but don't get too down on me, bro. And I see these donations coming in. I'm extremely grateful. I'll go over and check that information. Presently. What? Right. I'm just trying to work my way around smoothly to my recycle bin and flush the toilet on that one. That's better. Right, so yes, back. So anyway, that's enough of the discussion of that thing. In terms of just jumping up here, so that it amortizes out a wee bit, and the TA will be the same between the two charts. What are we looking at overall here? So far, this is obviously resistance, right? Above our heads. That's a big deal. We've come in and we've closed in this gap though with the most recent movement, the body right here. So we pushed on quite a bit past in terms of the 15-minute chart candles in terms of closing that one. This is still very much a small term time frame, but we've pushed back through that gap so far. I mean, taking this out right here, right now at 550. $550 would be kind of negative, right? It would be. So how are we doing really from this recent movement? If we want to look at it on this, just so I can see it quicker, going to the 4-hour time frame, because you can see there's 3 different places where we could have measured from essentially in terms of our lows to try and find it. This is we'll just go from the lowest point in terms of the fib retracement from over here. You can see that there's obviously this difficulty. I maybe not articulate myself very well there, but sort of the people who follow along with what I'm saying fairly quickly most of the time will have noticed that there was a bit of a struggle to know where exactly would have been the pivot point to be looking to on this one, and just measuring it just in terms of the full range of movement to have an idea of where it would be bringing us down to is 543. It's not going to change dramatically going between them. 543 is still the round number there. 543 still is all the same. same sort of thing. That makes a good deal of sense, really, overall. If we were to be taking out you can see in terms of the shapes of these candles, etc., though, that from this most recent low, you're just kind of looking down to, if we take out the low from the 23rd of August, or 23rd of August there, then you'd be looking kind of down the way. You'd be thinking maybe 530 or 525 probably at that stage. Coming back down and retesting the highs, is that a bit much to ask? It could totally happen, but that would be then signifying that you've had the end of this you've got a double top in there. Could that be a nice basin? I mean, I was looking at this on the way when we were zooming into it, right, and thinking this is like, the volume profile on this one. Sorry, the sentence is that when I was looking at this, I was hoping that this would have been the ultimate low. It would have been nicer to have had it be more like a basin down here, to correspond here with this having happened, and it just be the ultimate low right there at the middle, etc., just for the overall look of the thing. In which case, then you could have done the sort of the classic caterpillar pattern that we like to talk about on the show from time to time, and been saying that maybe we've got a cup with handle on the go here. It's obviously not an actual pattern, the caterpillar pattern, but you'd be saying, do we have a cup with handle on the go? If that were the case, and if this is by virtue of the fact that I've just taken this and pulled that over, I have to say this here, that's now an inaccurate Fibonacci, but what number wouldn't be the different is the 50% line, which is purely what I'm looking for, is between the highs and lows of that basin. And I'm going to drag this over now to here. So this is drawn in effectively upside down, but it's looking at it just for the 50% line. It's going to be the same either way around, just so everybody can see that I'm doing this, that I know that would be that. Anyway, then be looking here to 530 for that cup with handle type thing. So could we have that? Could we be coming in to tickle off the rosy cheeks in here of the caterpillar at 530? Could we have that? Could we have that as part of a cup with handle? Could we have that? That would be something to kind of consider. Then at least it frames our thinking, taking out these zones. So if like you go laser right through the eyeballs of our caterpillar pal over here, and you're taking out this region, and you're up there at 560s, closing out 570s. Then we want to see a continuation, right? Then we want to, but let's just look at how that would look. How would that look on the charts if that were the case? You'd have this upward movement, and then you'd have a half staff pattern. Now these half staff patterns, I like them more in stock land than I do in crypto land. In crypto land, actually, to be honest with you, I would be very clear to be saying that this is a crap looking bull flag. But you could have this wee bit more happen in stock land, I suppose. I don't know. I mean, these are anecdotal type experiential things. I'm not Bulkowski. I haven't gone through 1,000 examples of the last 10 years to actually form some sort of statistical based evidence approach led basis for this. Instead, I learned by standing on the shoulders of giants many years ago, trying to do sorts of things like that and develop up my own sort of ability to understand things and all the rest of it. And then, of course, I've adapted with the times. I mean, crypto only really started 10 years ago, for example. So, anyway, so we're still discovering all these things as we go along, but this would be one of the things I would think. So a half staff pattern, could we get that? We could, just generally speaking then, roughly, where's your range? The low 500s up to the mid 500s, that would take you up to the near 600s, and the near 600s on us puts us up towards where our all-time high is. Is that right? Let me just verify my knowledge on this one. I mean, my knowledge, but my sort of like my expectations. Yeah. So that would bring us up to where our all-time highs were. So that's conceivable in terms of, where you would find the momentum off of any move from this region tapering out at. So you could then think, well, then is that going to be the case? So what did we say as well in terms of did I actually do the measured move? Did I do the measured move of the caterpillar? I don't know if I did the measured move of the caterpillar. I can still use the weekly time frame for it. Why? It was 530 down to... that was the measured move of the caterpillar. Wait, 530 down to 500. So, 550 to 500. So, yeah, $600. Yeah, so the caterpillar, the half staff pattern, that, yeah, all tying together. So you're talking 530. If we don't achieve 530 in terms of the caterpillar and we're going on ahead, then it's the half staff and you're looking for 590, 590. Same essential sort of general setup. I mean, it's exactly the same as well in terms of like if you were looking at this from a sort of just a William O'Neill perspective and you'd never heard of Bulkowski or whatever, you'd just be calling that a cup, that then saying that there doesn't need to be a handle, blah blah blah. So it's a case of like all these people would know it's a case of just like timing your entries in a way. So yeah. Right. So okay, cool, nice one. Let me just see. Let's jump back over to GameStop, I suppose, and see how our MOAS stock is doing. Wonderful. It's wonderful. Thanks for asking. That's wonderful. Well done. Well done, everybody, by the way. It took a lot of conviction from us. I was saying this, I sang along with, or kind of mimed, I suppose, mostly, the Lewis Capaldi song down here at 145, saying, "Hold me while you wait. My faith is shaken, but I still believe," all that good stuff. Do you remember? It was nice, wasn't it? It was nice. It was pretty emotional. It was pretty good, but it worked pretty well. And that was it. That was what we were saying. It was like that's why it's the hard times when you know that things have been going against you. Now, of course, it's the benefit for all of us in terms of seeing it come up to 174.50. For a lot of people out there, they'd be kind of going crazy right now, I suppose. But of course, slightly different for us, having me asked you yesterday morning what you, the audience, thought it would be going to, and it was you yourselves that said it would be going here. Screw anything I had to say. It was you that told me it was going here. So on that basis, all I can say is well done to you, the listener. Well done to you for all that and for having having got the prices up here. Super well done to all of you. Let's just check in on how AMC's doing. 38. Oh, nice as well. So we're good. We're on the way. We're trending now. Of course, the advantage to us, right? The price that we paid was, of course, that emotional sort of process that you go through at extreme points in markets. But the benefit that we get from it is obviously having had the ability to buy into positions down there and then be in them at this point here and not experience FOMO at this stage. Now, there'll be other people who are coming in and saying FOMO, and it's like it's hard to help those people. Same sort of conversation though, because it's the price you pay. Same sort of conversation we could have with regards to AHT. Bad Mama Jamma, D Harker and myself discussing this one the other day and saying it's scary though. It was, it is. Right? Shout out to D if you're out there at the minute watching along, and shout out to Bad Mama Jamma if you're watching it as well. It's scary. That was the conversation we had. Trading is fun. It's enjoyable. There's so much to it. It's so enlivening. Enhances people's lives. I genuinely believe it does. It's sort of like such a fantastic thing to be doing and to be a part of and to experience a visceral and real emotional thing. Have that catharsis along the way, and to have been able to sit there and say, yes, this is scary when we were looking at the prices down there at 12.22. Bad Mama Jamma laughing with myself and D in there, how I'd said on that time that my stop would have been at 12.20 or Bad Mama Jamma had his stop at 12.20 or something along those lines. We were talking about 120 in terms of how the lower prices would have been before the stock split. And it went down to 12.22, and it's scary, and now it's up much more. So buying that low at that time felt like, hey, this is all time lows on this stock, yada yada. And that means that you don't have to FOMO in at the tops, but it puts me in a bit of an awkward position where I have to be able to kind of juggle 3, 4, 5 different mentalities inside my own head. As somebody asked me, well, what do you think about this price point now? Like, what do you think about it now? And it's like, well, it's a hard one to answer because I didn't live through all of that scariness to be sitting here thinking about it now today. If I'd been living through, if that wouldn't have been scary, had I been waiting till now to get it. So you're asking the wrong guy in particular in relation to this particular stock right here, right now, in a sense. But it's green. Yeah, it's green and it's right there. I mean, and there's no denying it. Like, look at the downward sloping line here and how we're coming in. We're testing this area. Yeah, we could come back, retest it. We could go for some sort of breakout. What do you mean, Rocky? What do you mean? Well, you've got those three lows towards the downside. This wick here, and then this wick here, and you've got these highs up here, and you can connect to that one, to that one, to this one, and and it's right here, right on it. And this is a wedge, so it could go up, could come back down. It could go, could go up to $16 and come back down here. It could go up, and it would be shame if it went to 15.50 and no higher, because that would be a lower high. But if it whatever, I mean, like, in terms of like predicting the future, don't really necessarily need to, in terms of like having got us this far already. And at this point, in terms of like managing your risk, I mean, you can obviously just put in stop losses in positions where you're in profit, and you can just go to sleep, eat some cake, I don't know, go to the movies or whatever. As we hit 3 o'clock my time, and of course the first half hour's trading of the day is done in Americana land. We're over there at $174.69 cents on GME. And I'm interested in knowing what other stocks that you would like to look at as well, because of course this is a whole market load, a whole literal market F ton of stocks out there, and I've put that NYSE picture up on the thumbnail so that people will be encouraged to do that. So if you are here and you've not commented in the comment box so far, there could be a reason for that. It could be because you are a new subscriber. Be sure to subscribe, because the chat is only open to subscribers. You just have to have been subscribed for 5 minutes. It's not a massive ask. But if you don't want to subscribe, then that means you don't want to chat, and that suits me, because it means I don't need to emotionally try and engage and remember your name and get to know you and all the rest of it, just for you to never turn up again. Dink, I started getting effed in 1986, 2000, 2008, etc. You've got a long history of getting effed there, Dinky. Christy Callahan, ADMP, if you get a chance, so that's cool. That was one ADMP. I mean, was that one that somebody asked me to, and I wrote on the screen, and I was trying to remember to do it the other day, and I forgot. And I was like, I'm sorry, I forgot. Or did I do it or not? I can't remember, man. I know there was something about this chart, though. It's got no drawings on this one right now. That's Crayons with Friends. I'll just open up, just in case I've already got a bunch of drawings on this one, I'll just open up my Rocky Outcrop layout. Boop-a-lip-boop-boo. Loading. Please fasten your seatbelts. There's EGH, eHome Household Holdings Limited. How are we doing on this one today? Did I take a position on this yesterday? I can't remember. I want to say I did. I know that I was intending on going long on this thing yesterday. For my own personal benefit, just because we're here and we're talking about this thing right now, how did this go for me so far today? Oh, good. I was correct. Excellent. We gapped up from 354 to 365. Looks to be like it could potentially be a breakaway gap. We might come back down and retest that 365 area again, but that's cool because I'm filming anyway and I'm busy right now and I don't mind. That'll be easy enough for me. So anyway, this is not financial advice for anybody, and that is just me talking about my own thing. I'm managing that much more carefully than I imagine anybody in the audience would. So I'm definitely not financial advice. ADMP, a pharmaceutical company. Yes, there are drawings on here from recently. That's good to know. What have we got over here? The 236 was in around about that point at the time, was it? Wonder when we did the analysis of this thing. Certainly looks to me like it came back in to test that at 104. Fan dabby dozy. That would suggest that the technical analysis probably worked out. I have no idea though. Honestly, see if we did this yesterday and I'm embarrassing myself right now talking about it like that, I will be embarrassed. Let me just go and make sure that let's just go and see how market close went, etc. So there to there, down the way. When did I talk about this, man? Tell me it wasn't yesterday. At least this is in this zone here. What have I done? Right. Anyway, my old drawings aren't helping me. I hope that the TA was all right on when I did it last time. I always do. Crying out loud. Too much probably. I've got vague memories of this thing. Obviously, I can't trade everything that anybody asks me to take a look at, so it just makes things that little bit harder. I tend personally to not bother trading pharmaceutical stocks or biotech. It's personal thing of mine. I mean, it's cool. If I was trading this, I would be trading it for just one of these moves myself personally, just one of them. It'd be cool to get a series connected together and be able to do something with a trend, but you never know. I mean, I would maybe just looking for. I don't know. It's just it depends. You know, it always depends. I can't be bothered keeping up with the news on pharmaceutical stocks. So, like generally speaking, illiquid and manipulated in the news so badly. Gosh, stuff like that. So it makes dangers on it, but it's cool stuff too. Ah, well, okay. High, lower high, lower high so far. Low, higher low,